In this video, I'm going to talk about multiple time frame analysis. So when you're looking at trading a stock, and this is especially true when you're talking about day trading, multiple time frame analysis is absolutely crucial. So the first thing you need to determine is, what is the trend? In other words, is the market gradually going up like we see here on the Apple daily chart? Or is it gradually going down like we see here on the Deutsche Bank chart? You can see clearly over the course of the entirety of 2018 so far, the market has certainly been selling Deutsche Bank. So that in and of itself gives you the overall bias. There's also something called consolidation, which are just simply time frames of a cycle, if you will, where the stock really isn't going anywhere. So, for example, each one of these candles represents a day. For a couple of months, Apple really didn't do anything, and that's called consolidation. This will dictate exactly how you approach a stock, if you will. One indicator that we will talk a lot about in this course is volume. You can click on indicators on the TradingView platform and then go to volume. Just click on that and you're good to go. And you can see that the volume shows up at the bottom of the chart. It's color coded by the candle. So this was a green candle, for example. So that's a green bar. The higher volume, the better off you're going to be, especially day trading. So watch what happens. This is an hourly chart of Apple. Let me go ahead and put that volume back on. You can see the volume's lower, of course, because each one of these is an hour, not a day. But watch what happens. It shows on certain candlesticks much more volume, and that gives you an idea as to how the market participants truly participated in that particular candlestick, for example. Gives you an idea of conviction, if you will. How to use multiple time frames? Well, that's essentially what we're looking at here. We're looking at a longer term uptrend. And there is, for those of you who know anything about patterns, there is a pennant forming, which is a bullish pattern. We're in an uptrend. So when you look to Apple on the short-term charts, and in this case, it's an hourly chart. It could be any time frame, 15 minutes, 5 minutes, whatever it is you're dealing with. You need to be looking for buy signals, candlesticks that tell you, hey, it's time to get involved, and hopefully with an extreme amount of volume as well. That typically will lead the way. So now that we know what we want to do and which direction we want to take the chart, we then can ignore selling opportunities because we know that they are less likely to succeed over the longer term. When I mentioned previously that we were in an uptrend, then you start to look for signs, perhaps like an inverted hammer here. That's a candlestick, breaks to the upside. And once you break that, that's a good sign. And you can see that we have gained from there. So that's just one example. And this is all based upon the fact that Apple has been rising over time. That means there's much more interest and much more volume to the upside. The larger institutions are getting involved. And therefore, even though it had been choppy for a couple of weeks, it still, over the longer term on the hourly chart, as you can see, has paid to be long of Apple, not short. Here's a 15-minute chart. See, it looks pretty gruesome there, but when you start to fade out, it's a completely different scenario. You can see that, again, even with these nasty pullbacks, it's still, over the longer term, you continue to do better. And remember, to the upside. And remember, that's exactly what this is about. This is about playing the odds. You're never going to get it all right. So, as a quick example, before we cut out of this, you can see that there's a gap there. And when you blow through gaps, typically there's a lot of selling pressure there. And you can see that we did have a pretty negative move right there. When you return to the gap and you blow through it, that's a very bullish sign. So, for example, above 224 might be a very interesting place to buy Apple because you have the weight of the market longer term with it, and it is a bullish technical signal. Again, though, volume helps, and I would urge you every morning before you start placing trades, look at the longer term charts and pay attention to whether we are with the trend or against the trend. Being against the trend, really not a very smart thing to do. Deutsche Bank, as you can see, has broken down multiple times, shooting star right into a gap, selling opportunity, but you could even go as far as going down to the 1 hour chart and start looking for selling opportunities. At this point, if we blow through this gap, that would be a negative sign, probably have short sellers coming into play. Now, I will point out volume is crucial on a multiple kinds of levels, not the least of which is getting in and out of a stock. As a day trader, you do not want something with a spread that's going to be 5 or 10 cents, a less liquid stock. A day trader is going to want to be able to get in and out, not lose 6 ticks trying to get filled. That's also important. So day traders tend to stick to larger stocks such as Apple or the SPY or a JP Morgan, that type of stock. Stick around. We'll talk about support resistance trading strategies next.